Okay, my voice is audible, everyone. Screen visible, voice audible. Please confirm. Very good evening, all of you all. Good evening, good evening. Switch on the videos, please. So, shall we start? Yesterday, I gave you one question to solve. Question number 10. Did you try that question at home? 50B. We did this section yesterday. Okay, no? 50B, slump sale. Do you remember, guys? Okay, so this section has that question has this implication of this section. Okay, so this concept is applicable in question number 10, which I gave you to solve at home. So I'm going to discuss that question right now. Okay, pay attention. Question number 10 it was. See, Mr. A is a proprietor of Akash Enterprise having two units. Akash Enterprises is having two units. He transferred on 1st April 2024 his unit 1 by way of slump sale for a total consideration of 25 lakhs. So he has transferred both the units or unit 1 only? Unit 1 on 1st April 2024. Okay. By way of what? Slump sale. And total consideration was 25 lakhs. So friends, 25 lakhs is the total consideration, meaning the lump sum consideration for transferring the entire business. So this will be treated as full value of consideration. But if the fair market value of the assets transferred in the slump sale, if that fair market value is higher than this amount, then this amount cannot be taken as full value of consideration. We'll have to take the fair market value. So they are saying that the fair market value of the capital assets of unit 1 on 1st April 2004 is 30 lakhs, meaning that now we will have to ignore 25 lakhs and we will have to take 30 lakhs as full value of consideration. Yes or no? So my full value of consideration is 30 lakhs. I will write 30 lakhs full value of consideration. Okay, from this he incurred expenses on this transfer and the amount of expenses incurred was 28,000. So can I say 28,000 is a transfer expense? I will reduce 28,000. So the net consideration which I will be getting will be 29 lakh 72,000. 2972 is the net consideration. Okay. Now out of this net consideration, I have to now reduce what? I have to now reduce the cost of acquisition. And what will be the cost of acquisition of this asset? What will be the cost of acquisition of this unit? It's net worth. Okay. So to calculate the net worth, we'll have to first take the assets, all the assets, total assets minus total liabilities, outside liabilities. Okay. So on the liability side, if you see, they are saying that bank loan is 2 lakh rupees, that is outside liability. Trade creditors is also outside liabilities. So I will be taking both these, bank loan also, and I will be taking trade creditors also. But I cannot take the entire amount because the entire amount does not relate to unit 1. Only 70% of the bank loan is related to unit 1. So 70% of 2 lakhs will be 1 lakh 40,000. And trade creditors 1,50,000 is there. 20% of that is for unit number 1. So 25% of 1,50,000 will be 37,500. So 37,500 plus 1,40,000 will give me a total liability of 1,77,500. Now I will have to just calculate the total assets. Out of total assets, I will reduce this liabilities. I will be getting what? I will be getting the net worth. Okay, and that will be treated as cost of acquisition, which I will reduce from the net consideration. Okay, no. So to calculate the total asset, will I take the total asset of both the units or only unit 1? Only unit 1. So for unit number 1, which is getting transferred in the transaction of slump sale, what will be the total asset? See, land is not a depreciable asset. So the book value of the land needs to be taken. But if you will see the adjustment number 1 says that revaluation reserve is created by revising upward the value of the land of unit 1. Can you see revaluation reserve of 3 lakhs? So land value of the land is revalued upward, and 3 lakh rupees of revaluation reserve created, that is written on the credit side, written on the liability side. Okay, no? So what I will be doing, I will be reducing this revaluation reserve amount out of the value of the land, because the actual value of the land is not 12 lakh, it is only 9 lakhs. So what I will be doing, this revaluation reserve I will eliminate from my 12 lakhs. So 9 lakh will be the book value. The actual book value of the land is 9 lakh. This 9 lakh only I have to take as the value of land for the purpose of calculating my net worth. Okay. Now, no individual value of any asset is considered in the transfer deed. Thank God. And that is the reason why it is known as slump sale, no? So in the transfer deed, you have not given any individual values to any asset. So, okay. Other assets of unit 1 include patents. Oh my God. They are talking about other assets. 1,50,000. Includes patent acquired on 1st July 2022 for rupees 50,000 on which no depreciation has been charged. Meaning that out of this 1,50,000, no, out of this 1,50,000, 50,000 is the value of patent which was acquired in 2022. Do you remember that patent is an intangible asset which is used in business? For that you get depreciation. So patent is a depreciable asset, depreciable intangible asset. If I have acquired this patent in 2022 for the purpose of my unit 1 business, definitely I would have taken the depreciation under the PGBP head for the year 22-23 as well as 23-24. That depreciation is not shown here, meaning that entire 50,000 is recorded in this 1,50,000. So for that 50,000, that 50,000 book value, that 50,000 cost of this patent cannot be taken for calculation of net worth. For every depreciable asset, I will have to take the WDV for income tax purpose. And its WDV for income tax purpose is not 50,000. What I would have done, I would have taken the first year depreciation in 22-23 out of this, and I would have also taken the second year depreciation for 23-24 also. And immediately before the slump sale, immediately before 1st April 2024, what will be the WDV? The WDV will be 50,000 minus the depreciation for these 2 years. That will be the WDV for the income tax purpose which I have to take for this, for this patent. So 50,000, what I will do, I will reduce the depreciation for the first year, 22-23. So what was the depreciation which I charged in 22-23? In 22-23, I would have charged 25% depreciation because intangibles under the head PGBP, 25% depreciation rate is there. And that 25% I would have fully charged because that was the first year of patent, and in the first year of patent, the patent was used for a period of 180 days or more. 1st July it was bought, sir. 1st July to 31st March. If nothing mentioned, that means it was put to use from 1st July itself, before my birthday. Hello. So it was used for how many days? 180 days or more in the first year. So first year depreciation would have been at full rate. And that rate was 25%. So 25% of 50,000 will be 12,500. That was the depreciation for the first year, which I would have claimed out of 50. Minus what? Minus the depreciation for 23-24 also. So what was the depreciation for 23-24? WDV basis 37,500 into 25% will be 9,375. Now, can you tell me what was the value of patents as on 31st March immediately prior to slump sale? WDV was 28,125. Did you all get this amount? So for patent, no, I'm not supposed to take 50,000 because that was a depreciable asset. On that I would have claimed the depreciation. After claiming the depreciation, whatever was the WDV for PGBP, I will take this WDV for the net worth calculation. Please remember this, guys. Okay. So this was the only catch in the question. Otherwise the question was very easy. Now tell me, What about the balance 1 lakh rupees? Balance 1 lakh out of the other assets will be taken at book value only. Getting my point? Everyone. Now, the value of machinery represents the written down value as per the Income Tax Act. Wow, thank you so much. If they would have given me the book value of machinery and they would have given me the details for calculating depreciation, I would have calculated the WDV of the machinery also for income tax purpose. But what they are saying that the value which is recorded in the balance sheet is same as that of the WDV, which is there for income tax purpose. So I will be directly taking this 3 lakh rupees value for the machinery. Yes or no? And debtors will be taken at book value. Now, can you calculate the total? 9 lakh plus 3 lakh, it will be 12 lakh. 12 lakh plus 1 lakh, 13 lakh. 13 lakh plus 1 lakh, 14 lakh. 14 lakh plus 28,125. So the value of total assets will be 14 lakh 28,125. This is the value of total assets. Now, can I do total assets minus total liabilities? 1428 125 minus 177 500, I will be getting 12 lakh 50,625. Can I say that 12 lakh 50,625, that is my net worth, will be deemed to be the cost of acquisition? I will reduce that. What amount I will get? Minus 29 lakh 72,000. I will be getting 17 lakh 21,375. 17 lakh 21,375. And my dear friends, this is your capital gain. Okay, and this is your long-term capital gain. Why I am calling it long-term capital gain? Because see, unit 1 was set up in the year 2005-6. So from that date you started holding the unit 1 till the date of slump sale. So the period of holding of the unit 1 is more than 36 months. If it is more than 36 months, unit 1 becomes long-term capital asset and the resulting gain is long-term. You never get any indexation while calculating this capital gain. Even though you transferred prior to 23rd July, there is no indexation benefit available. Yes or no? So why am I calling this long-term capital gain? Because since 2005-6 to 31st March 2024 was the period of holding, and this period of holding was more than 36 months. Hence, the unit 1 was a long-term capital asset and the resulting gain was long-term capital gain. Did you all understand? Everyone? So this was your question, and you won't believe this exactly similar type of question was asked in the exam 2 years ago, and it was for 10 marks. Just imagine these kind of questions they are asking in the exams. Will you be able to solve such questions? See, now what will happen? No, they will just shuffle few amounts. That's it. The entire calculation remains same, no? So they will shuffle some amounts, they will shuffle some details. That's it. You have to be, you have to remember that what we have studied in 50V. And we have to apply those concepts in the same manner, in this same style to get the final answer. Getting my point? No question will be difficult. Please don't keep all such sections in options in your exams. Okay? If these sections are coming, if questions on these sections are framed, no, it is very easy questions and that can give you cash marks in the exams. Sure? Should I move ahead? Friends, ready? Okay, no problem. Now, let us discuss the other part of the chapter now. See, in special aspects, we are in the third part of the chapter, special aspects. We have covered section 50, we have covered 50A, we have covered 50AA, we have covered 50B. Entire 50 series is going on. Now, if we discuss about 50C, okay, 50C is one of the most important sections in your capital gains. See, whenever they will ask the questions in the exams, on capital gains, either they will ask on shares or they will ask on immovable properties. What did I say? Either they will ask the question on shares or they will ask the question on immovable property. Other assets are very rarely asked. Okay, no. But majority of the times, these two capital assets, immovable property and shares, the questions are framed on these two assets only. And out of the 100 questions asked for capital gain, at least 70 to 80 questions are asked on immovable property. And whenever an immovable property question comes, majority of the cases this section is there in that question. Very important section and very interesting also. See what they are saying, that if an assessee has transferred, he has transferred an immovable property. Sir, what is this immovable property, sir? Immovable property means any land or building or land and building. Immovable property. But wait, rural agricultural land not covered here. That is not a capital asset only. Other than rural agricultural land, all the immobile properties are covered. Meaning, any land can be there, yes sir. Any building can be there, yes sir. Any land and building can be there, yes sir. Any. Now, this immobile property is transferred. So, on transfer of this immobile property, the stamp duty value, what did I say? Stamp duty value, meaning the SDV of this property was higher than its sale consideration. So if the stamp duty value of the property is higher than the sale consideration and the difference between stamp duty value and sale consideration, if this difference is more than 10% of sale consideration, then section 50C is attracted, then only 50C will become applicable. And if section 50C becomes applicable, the full value of consideration of the immobile property which you were taking as sale consideration, you are taking the sale consideration as the full value of consideration. No, the sale consideration, the selling price of the immobile property will not be treated as your full value of consideration. Rather, the stamp duty value will be deemed to be your full value of consideration. So your sale consideration we will ignore. No, we will not take sale consideration for the purpose of calculating the capital gains. Rather, the stamp duty value will be adopted to calculate your capital gains, because it is more than your sale consideration, and the difference between the stamp duty value and the sale consideration is more than 10% of your sale consideration. Why it is done, I'll tell you one thing. See, whenever the transactions for buying and selling of immobile property takes place now, majority of the transactions, the seller will take cash, sale consideration in the form of cash, and very small portion of the sale consideration he will take in check, through bank transfers and all. And the reason being very simple. See, if you are selling a property, you are a seller, become a seller and think, okay, you are a seller, you are selling a property for 50 lakh rupees. Would you like to pay tax on 50 lakhs, or you will love to pay tax on 30 lakhs only? Even if you have sold the property for 50, if you get the opportunity to pay tax on 30, definitely you will love to pay tax on 30 only. So to do that, what you will do, you will sell the property for 50 lakhs, but you will tell the buyer that please don't give me 50 lakhs entirely in check. Don't transfer that 50 lakhs in my bank. Do one thing, transfer only 30 lakhs in my bank and give 20 lakhs in the form of cash. In majority of the transactions throughout India, this is a practice which is followed everywhere. The seller is not going to take the entire sale consideration in white, in bank transfer, because if he takes the entire sale consideration through bank transfers, what will happen? he will have to pay tax on the entire amount, and that is not a small amount, that is a very big amount. So mostly the sellers don't take the entire sale consideration through bank transfer. They try to take the maximum portion of the sale consideration in cash. Because if you are going to receive that in cash, that is known to you and your buyer only. Buyer is not going to tell anyone that he has given this much cash to you, because he would also have, from his black money paid you that amount. And for you, now it has become your black money. Income which you are receiving in black. Black means cash income. On that, you are not paying any tax to the government. Getting my point? Definitely, you are not going to tell the government that you have received 20 lakh rupees also as sale consideration for your property. And the agreement which you will make, agreement for sale of the property, which you will register also on the name of the buyer, the agreement will be made for 30 lakhs only. So that by looking at the agreement also, everyone feels that you have sold the property exactly for how much? 30 lakhs. Whereas you would have sold the property for how much? 50 lakhs. Getting my point? So these kind of transactions happen, and the assessees are not honest people. All the assessees who are selling these type of properties, government see them from the eyes of a doubt. You will be always doubted whenever you are selling the immobile property. Because nobody is that much loyal or nobody is that much honest to pay tax on the entire amount of sale consideration, except for people like me, You don't find people like No, I'm telling you the fact thing. See, when I bought this house, this house which I bought it 3 years back. Okay, the cost of this house was 50 lakhs. Okay, 3 BHK flat, very good. And the builder was asking 50 lakhs. See, this particular transaction which I am talking right now, it will happen in the case of stock in trade properties also. But right now we are talking about immobile properties which are capital asset. So what if the immobile properties are held as stock in trade? For that also I will have a discussion with you. Don't worry. Builder was telling me that, sir, pay 50 lakh rupees. So I said, okay, 50 lakh is fine with me. House is nice. So I would be buying it for 50 lakhs. So he said, sir, do one thing, give me 10 lakh rupees of cash and balance 40 lakhs. Basically, he was demanding more. But later on, when he came to know that I am not showing interest, he offered me that, sir, give me 10 lakh rupees of cash only. Don't pay me that much heavy amount of cash. Give me only 10 lakh rupees of cash, and the rest to 40 lakhs you transfer in my bank account. I said, why you are doing that? I know why he is doing that. But still I asked. He said, you are a chartered accountant, sir. You know everything. So I said, see boss, I am a chartered accountant. That is why. I will not pay you a single rupee in cash. If you want to sell the property to me, I will not give you a single rupee in cash. Entire 50 lakhs. I am ready to give you. But I don't have any black money with me to pay you that amount. And even if I would have had it, I would not cheated my government, So if you want, you can take 50 lakhs from me. I will be writing a check on your name and will pay you. So he said, sir, please don't do this, because if you will do this, I will have to take that 50 lakh rupees in check from every buyer. Because, sir, I am having 100 flats in the building and everyone will pay me the full amount. Just imagine how much tax I would have to pay. So do one thing, sir. Don't pay me this entire amount in check. Just give me 40 and give me 10 lakh rupees in cash. I said, no, I am not going to give you a single rupee in cash. So he did some arrangements for me. What he did, he took 40 lakhs in check towards the cost of the house. And he had opened 2 small firms. One firm on the name of his wife and one firm on the name of his brother. One is interior decoration firm and the second firm is the firm where he used to sell the hardware items. Taps and all, taps and pipes and all. First firm is interior decoration firm and the second firm is hardware items. In the first firm, his brother is doing the business of selling the sanitary item along with the interior decoration. His brother is selling the tiles, etc. Tiles and those bricks, etc. Construction material. So what he told, sir, give me 40 lakhs towards the cost of the house, and 5 lakhs each. 5 lakh on the name of my wife towards the hardware fittings, sanitary fittings, which as per your request, I will show that as per your request, I have added them extra. So that is the cost of my house only. But I am not paying that as a cost of my house. I am paying that cost of the sanitary fittings in my house. The normal sanitary fittings you are giving to others, no? Other flats. I don't want to take it. I want premium sanitary fittings at my house. So for that 5 lakhs extra he charged. Okay. For that bills and everything he issued. And 5 lakhs extra he charged for the tiles. I did not want that same tiles which he was fitting in this flat. I wanted different tiles. So 5 lakhs extra for those tiles and other construction material. For me, it is anyways cost of my house. 40 lakhs house is taken at 40. 5 lakhs for the sanitary materials. Hello. That will form part of my cost of my house, and 5 lakhs for the tiles and other construction material, okay, which according to my specification he will put these tiles, etc. So the cost of my house will now become how much? 50 only for me. But I paid him 40, which he usually took from everyone, because he was taking 10 lakhs minimum cash from every seller, every buyer. So just imagine 100 flats are there, guys. 100 flats are there. Every flat minimum on an average he has taken 10 lakh rupees. What? Cash. 10 lakhs multiplied by 100 flats. How much is the amount? Approximately 10 CR. He earned in cash and he did not pay tax. So this builder can do in volumes. But people like us also can do, no? You are a seller, you are selling one property, okay. The property you sold for how much? You sold it for 50 lakhs. And you are telling the buyer that buyer, don't pay me 30 lakhs, pay me only 20 lakhs. Sorry, pay me only 30 lakhs in check, bank transfer. Balance 20 lakh, pay me in cash. Just imagine if everyone starts doing it all across the country, how much tax revenue the government will lose? There has to be some benchmark value, no? See, right now you were able to take how much? 30 lakhs. But one fine day, one buyer will say, one seller will say, no, I am not taking that 30 lakhs also, I am taking only 10 lakhs, rest 40 lakhs in cash. There has to be some benchmark. That below that, if you are taking, no, below that we will not accept. So what happens, when you are a seller and the opposite party is a buyer, you are a seller, opposite party is a buyer, you will make a sale agreement. In that sale agreement also, you will be showing that amount which you are receiving in check, bank transfer. You are not going to show the actual value in that sale agreement. And now whenever you will be selling, you and buyer will go to the registrar, property registrar, to register the property on the name of the buyer. Now what that registrar will do, he will register the property, register the sale agreement. So in that sale agreement, whatever the sale value will be written, no, on that sale value he will charge what? Stamp duty. But just imagine, in any state if you go, no, minimum stamp duty all across the states in India, minimum stamp duty is 5%. In some state it is 6%, somewhere it is 7.5%, yes or no? In Gujarat it is 5%. So if you get the property registered on the name of the buyer, the sale agreement will be registered at the sale value. Higher the sale value, higher the stamp duty also. So two places you will be saved. Showing the less amount in the agreement will save you to pay higher income tax, and showing the less amount in the sale agreement will save your stamp duty also. So what this stamp duty authority guys, what these guys do, They don't blindly accept your sale value in the sale agreement. They also get the valuation of your property done. So according to them also, there is some value of your property, minimum value of your property. Below that, if you are showing the agreement value, no, on that agreement value, they will not charge stamp duty. They will charge the stamp duty on this value, which they have determined. That is known as stamp duty value. According to the registration authorities, this is the minimum value at which you can sell the property. You cannot sell below this. And that value they determine as per the state's stamp duty act. Stamp duty act is there, stamp duty rules are there. So by following the respective states stamp duty act and stamp duty rules, the stamp valuation authorities, stamp duty authorities, they also determine one value for the property. And according to the state government, according to the registrar, this much be the minimum value of your property when you are selling it. If you are selling your property below this value, no, we will not take the stamp duty on the lower value shown in your sale agreement. Rather, we will charge the stamp duty on this minimum value which we have determined. According to us, your property cannot be sold below this value. Because they also know that what is the market value and everything going on. Getting my point? Stamp duty authorities, they will conduct a survey. They will have their own research, and based on their survey, based on their research, they will fix this value. And this value will be very less as compared to the fair market value also. Seriously, I am telling you. My property right now, the property which I bought 2 years back, it was 50 lakhs at that time. Right now the value is 60 lakhs. 65 lakhs. Yes. The buyers are ready to give me 65 lakhs for this property in which I am staying right now. But that time when I got the property registered, my sale agreement has 40 lakh only because I paid 40. But for others, others who exactly got their property registered at the stamp duty value, at that time the stamp duty value was only 25 lakhs. Just imagine how much is the difference. Approximately double difference is there. So stamp valuation authority says that bloody minimum show this much amount as your sale consideration. No, you are showing below this in the sale agreement. How do we accept? This much is the bare minimum which you can get to sell your property. And below that, we cannot charge your stamp duty. No. So what if your sale agreement shows higher value? Then on that higher value, they charge stamp duty. But if your sale agreement shows a lower value, to charge a stamp duty on a specific value, they determine that value. That value is known as what? Stamp duty value. Now, you have sold the property for how much? You have sold the property for 50 lakhs. You are saying that how much you have received? 30 lakhs. Will your assessing officer believe you? Or he will first believe the stamp authorities? According to you guys, how much is the minimum value at which the property can be sold? Because below that amount you are not accepting your stamp duty. According to you, the property can be sold at a minimum value of the stamp duty value, which was 40 lakhs, example. In our case, it was 40 lakhs. So the stamp duty authority says that if the property is sold, it can be sold for a minimum 40 lakhs. They are charging stamp duty on 40. Then how the bloody hell you are saying that it is only 30? If the stamp duty authorities don't take the stamp duty on your 30, they take the stamp duty on the 40 lakh stamp duty value, how do you expect us to take the income tax on 30? We will not take the income tax on 30. We will charge 40 lakhs as your full value of consideration. Because that 40 lakh stamp duty value is more than your sale consideration of 30. So what is the stamp duty value? 40. What is the sale consideration you are showing? 30. 40 is more than 30? Yes. And the difference is 10 lakh. And that 10 lakh difference is more than 10% of your sale consideration. What was your sale consideration? 30 lakhs. 10% of that? 3 lakhs. So is the difference more than this 3 lakhs? Yes. 50C will be definitely attractive. See, variance of 10% or less is okay. The difference between the stamp duty value and the sale consideration up to 3 lakh, it was okay. But how it is more than 3 lakhs also? If it is more than 3 lakhs, the difference is more than 3 lakhs. That means you are trying to fool us. You are trying to hide something from us. And if not trying to hide something, then you are a fool. Bloody, your property can earn 40 lakhs if it is sold. Why are you earning 30? You should be punished. So as a punishment, pay tax on 40 and not 30. And if you are trying to fool us, no, then also pay tax on 40, not 30. That way, they are at least able to charge tax on some amount extra. Even though 10 lakh will not be charged. Out of 50, only 40 is tax, but it is still better than charging tax on 30, no? Getting my point? Everyone. So are you an assessee? Yes. Have you transferred your property? Yes. Immobile property. The sale consideration of that property shown by you is less than the stamp duty value, meaning that the stamp duty value is higher. If the stamp duty value is higher, then your sale consideration and the difference between both these amounts is more than 10% of your sale consideration, 50C will be applied and your sale consideration will be ignored. For the purpose of calculating the capital gains of this immobile property, your stamp duty value will be deemed to be your full value of consideration. 50C done. Now see, what will happen, I will tell you. There will be two dates. Date of sale agreement. This is the date on which negotiations happen and the sale is finalized. Sale is final. Today I am ready to sell you. Today you are ready to buy from me. At what price? 50 lakhs. Example. So today the sale agreement will be made. This sale agreement will specify that I am a buyer, you are a seller, at what price the property is sold, what is the description of the property, at what price it is sold, how you will pay the consideration, how much advance right now, how much in the next installment, okay, and when at the time of registration, how much balance will be paid at the time of registration of the property. All the details regarding the sale of that property will be mentioned in this sale agreement. Now the moment this sale agreement is made, you have to pay the buyer has to pay some token amount. Buyer has to pay some advance. Okay. Saying that, see, the sale agreement is final. Now you cannot sell the property to anyone. I have bought the property from you. How much? 30 lakhs? No. Take 3 lakh rupees advance right now. The balance 27 lakhs. Out of that 17 lakhs. Out of that balance 27. So balance 27, out of that 20 lakhs I will pay in the next installment within 30 days. And the remaining 7 lakhs I will pay once the property gets registered on my name. This was written in the agreement. So when this is written, when the property is registered, so there is one date of registration also. Usually registration happens later. First the sale agreement is made. And can I say there can be a considerable time difference between these two dates sometimes? Because sometimes we enter into sale agreement right now and the property gets registered after few months or maybe after a year or so. Yes or no? In case of properties having, huge sale consideration, these two dates can be different. And the time difference between these two dates is high. So normally what happens, these two dates are not same. These two dates are not same. These are different. And the difference between these two dates is so high that the stamp duty value as on this date is different. Stamp duty value as on the date of sale agreement, this stamp duty value is different. SDV1. And on this date, the stamp duty value is different. Stamp duty value is revised. Even the stamp valuation authorities, the registrar, they also update the stamp duty values over a period of time. Yes or no? Considering the market value of the property, considering the demand supply forces and all, they also update their stamp duty value frequently. Now what happened? There is a date of sale agreement. On that the stamp duty value was 40 lakhs. And on this date the stamp duty value was increased and it was 42 lakhs. See, when you will actually go for the registration now, at the time of registration the stamp duty will be charged on 42 lakhs. But today when the sale agreement is entered, no, today the stamp duty value was 40 lakhs for the same property. Now I have two stamp duty values. One stamp duty value as on the date of sale agreement, one stamp duty value as on the date of registration. See, actually when the property is considered to be transferred, that is the date of registration. The date on which the property is registered, that is the date on which the property is considered to be transferred. So normally this stamp duty value which is there as on the date of registration, this stamp duty value is to be considered for section 50C. Normally this stamp duty value is to be considered, yes or no? But there is one exception. In one exceptional case, you can take the stamp duty value as on the date of sale agreement also for the purpose of section 50C. See, if I ask you that if nothing is mentioned, the stamp duty value will be as on the date of registration, as on the date of transfer. Hello sir. So as on the date of registration, whatever stamp duty value is there, take that stamp duty value for the purpose of section 50C, always. But there is one exception. In that exceptional case, for the purpose of section 50C, the stamp duty value as on the date of sale agreement can also be taken. If can be taken for section 50C normally, but this can be taken for section 50C only if this condition is fulfilled. Only if sale consideration or any part thereof is received by the seller on or before date of sale agreement by way of prescribed modes. So, as on the date of sale agreement or prior to that, if the seller has received the entire consideration or even the part of the consideration, see, sale consideration was 30 lakhs. So it is not necessary that entire 30 lakhs could be recovered, yes or no? Even a part of that 30 lakhs, example, 30,000 is paid. So 30,000 is nothing but the part of 30 lakhs only, no? Hello? So even if the part, either the entire sale consideration or even any part of the sale consideration is received as on the date of sale or prior to that, yes or no? And by way of prescribed modes, then the stamp duty value as on the date of sale agreement will be taken for the purpose of 50C. But if this condition is not fulfilled, not satisfied, then in all the cases we have to take what? Stamp duty value as on the date of registration. Will you remember? This same concept will be there later on when we will be doing the gift provisions under IFRS. I will tell you that this concept I have already done in section 50C. That time you have to recollect this part. Will you remember this? Sure. So normally For the purpose of 50C, we take what? Full value of, sorry, we take the stamp duty value. If that stamp duty value is higher than sale consideration and the difference between them is more than 10% of sale consideration, 50C is applicable and the stamp duty value will be treated as your full value of consideration. So which stamp duty value you are supposed to consider in section 50C? If you want to compare with the sale consideration, which stamp duty value you will compare? The stamp duty value as on the date of registration. But in one exceptional case, what did I say? One exceptional case, the stamp duty value as on the date of sale agreement can also be taken. Only if the sale consideration or any part thereof is received by the seller on or before the date of sale agreement by way of what? By way of prescribed modes, then the stamp duty value as on the date of sale agreement can be taken for 50C. Then ignore registration stamp duty value. Yes or no? Will you remember? Should I move ahead? Very good. So this was your 50C. Okay. Now in 50C, there are three stories, small stories, which I would like to share. So first of all, 50C, this part I have done. Sorry, 50B. This was 50B. Yes. This is your 50C. This entire part I have done. Date of sale agreement not same. Okay. Now story number 1, story number 2 and story number 3. These three stories I am discussing with you. Okay. See. First story. Assessee agrees or accepts. Assessee accepts the stamp duty value. Meaning that the stamp duty value which is considered for the purpose of section 50C. First of all, tell me, what was your sale consideration? Your sale consideration, for example, was 30 lakhs only. Okay. So now we want to compare this. We are not going to charge tax directly on this 30 lakhs. Yes or no? So the income tax department will check this sale consideration will be compared with the stamp duty value. So they will take one stamp duty value. So the department is taking that your stamp duty value is 40 lakhs. According to us, the stamp duty value of the property is 40. And how much you are selling it for? 30. Difference is 10 lakhs. And that difference is more than 10% of 30 lakhs. So, we want to charge tax not on your 30 lakhs, but we are going to charge tax on your 40 lakhs stamp duty value. 50C will be applicable and we are going to take the stamp duty value 40 lakhs as your full value of consideration and not 30 lakhs. Hello sir. Do you have any problem with this 40 lakhs? Do you accept? You said shit. I sold the property for 50. And the stamp duty value I forgot to see. If I would have seen the stamp duty value, at least I would have recovered how much? 40 or 42. But I forgot to see the stamp duty value. And that stamp duty value appears to be okay also. I don't have any problem with that stamp duty value. Meaning that even you agree that the value, stamp duty value of the property is 40. The value which we are taking for 50C, according to you also, the stamp duty value of your property is 40 only, no? Do you have any problem with the stamp duty value? You will say, no, I don't have any problem with this stamp duty value. According to me also, it is 40 only. So if you accept that the stamp duty value of your property is okay, this is only your, according to you also, the stamp duty value of property is 40. Meaning you are accepting that the stamp duty value is 40 lakhs. and that stamp duty value which you have accepted, which we were taking and you accepted also, yes or no, that stamp duty value is more than the sale consideration, and the difference between both these amount is more than 10% of your sale consideration, then friends, the stamp duty value which is accepted by you, which is 40 lakhs, will be treated as your full value of consideration. Everyone, any problem? Any problem? Sure. This was story number 1. If you accept the stamp duty value, according to you also, the stamp duty value should be 40 only. And that only we are taking, which is more than your sale consideration, and the difference is more than 10%. We are going to definitely charge tax on this stamp duty value. And you are also accepting that this stamp duty value is your property's stamp duty value. Yes or no? So full value of consideration here will be the stamp duty value which you have accepted. Correct? 50C will be applicable, and the stamp duty value accepted by you will be full value of consideration. Now, story number 2. Assessee has challenged stamp duty value in court. Just imagine you don't like the stamp duty value only. You are not ready to pay stamp duty on this stamp duty value. We cannot expect you to pay tax, income tax on this stamp duty value. Can we? Never. Because you were so unhappy with this stamp duty value that you were not ready to pay the stamp duty also to the registration authorities on this amount, and you have challenged the stamp duty value in the court. You are telling the court that court, this registrar, property registrar has gone mad. He is charging stamp duty on this value. Hello. You are not ready to pay stamp duty also to the registrar on the stamp duty value. Hence, you have challenged that stamp duty value in the court. You are telling the court to determine the stamp duty value. We cannot expect you to offer that stamp duty value for income tax purpose. If you cannot pay tax, stamp duty, you cannot pay income tax also on this value. Now do one thing, when the court will finally decide that what is the correct stamp duty value, that you will accept, because you are telling the court to determine the correct stamp duty value. You are telling the court, you are complaining against the registrar that registrar has not fixed the stamp duty value properly. He has been biased in determining the stamp duty value. He is unnecessarily charging higher stamp duty by taking the higher stamp duty value of my property. So I don't want to pay higher stamp duty on the higher stamp duty value fixed by the registrar. Please court, tell him to correct or rectify the stamp duty value. So now the court will interfere. The court will finally decide stamp duty value should be how much. Then the stamp duty value which is decided by the court will be accepted by that registrar for the charge of stamp duty. You will also accept. Hello. And we will also consider that stamp duty value only for the purpose of 50C. Getting my point? So if the stamp duty value challenged, what will I say here? Your sale consideration was 30 lakhs. And the stamp duty value was how much? 40 lakhs. Do you accept it? No. This stamp duty value is challenged in the court by the assessee. So, will you pay stamp duty on this? No. So, will you pay income tax on this? For 50C. So this will not be considered for stamp duty also, not be considered for 50C. Now court will decide stamp duty value. Now whatever stamp duty value the court will decide, will you accept it? You will have to. Even the registrar will accept that. And if you both accept that, we will also accept that stamp duty value. Okay, now tell me how much stamp duty value the court can determine. Can it be higher than 40? Yes. Can it be equal to 40? Yes. Can it be lower than 40? Wait. Higher than 40 will not be determined. Only 40. If you lose the case, on what grounds you will lose? What the court will say? No. The stamp duty value determined by the stamp duty authorities is okay. Court cannot increase that stamp duty value. Yes or no? If you lose, court will say that okay, the stamp duty value determined by the stamp authorities is correct. You lose the case. But the stamp duty value will remain same. It will not be enhanced by the court. Getting my point? Then nobody will fight a case. Everybody will be afraid that, what if the court, pronounces a judgment, in that judgment if the court enhances the stamp duty value? So everyone will be afraid, no? So if you lose the case, meaning that the stamp duty value which was fixed by the stamp duty authority, court also thinks that the stamp duty value should be same. But if you win, meaning that now the court has decided a stamp duty value lower than this, and court can very well do this. So can I say stamp duty value decided by the court can be A, 32 lakhs? Yes or no? It can be B, 35 lakhs? Yes sir. And it can be same 40 lakhs also. So now the stamp duty value decided by the court will be considered for stamp duty as well as 50C purposes, both. Yes or no? Now on how much amount the registrar will charge stamp duty? The stamp duty value decided by the court. On that only he will charge stamp duty. On how much amount you will pay the stamp duty? The stamp duty value decided by the court. On that amount only you are going to pay stamp duty. Yes or no? So how much amount we will consider for 50C? The stamp duty value decided by the court. We will also consider that for 50C. Getting my point? Everyone? Yes or no? Now let's talk about the first case. The stamp duty value decided by the court is 32 lakhs. Is it still less than your 30 lakhs, more than your 30 lakhs? So 50C can be applied or cannot be applied? Cannot be applied. Because the difference between 32 and 30 is only 2 lakh, which is still lower than 3 lakhs. So in that case 50C will not be applied. In this case 50C will not be applied. What will happen here? Come on, tell me. If the court has decided, court decides 32 lakhs. So in this case 32 is still higher than 30. But 50C will not be applied here. Why? Why not applied, sir? Tell me. 50C will not be applied here because even if the stamp duty value decided by the court is higher, difference is 2 lakh, but that 2 lakh difference is not more than 10% of sale consideration. Hence 50C will not be applicable. And what will be your full value of consideration here, friends? Here your full value of consideration will be 30 lakhs only, the sale consideration offered by you. Okay, sir? Now what if the court decides 35 lakhs? Is it more than 30 lakhs sale consideration? Yes. And the difference is 5 lakhs. And now this 5 lakh difference is more than 10% of your sale consideration. Yes or no? Now here 50C will be applicable or will not be applicable? Will be applicable. And if 50C applies, then 40 lakhs cannot be taken as full value of consideration. We have to take this only, the amount decided by the court, 35 lakhs. Yes or no? Now tell me, if the court says 40 lakhs, then then also 50C will be applicable. And in that case, 40 lakhs will become your full value of consideration. Will you remember this? This was your story number 2. If the assessee does not accept the stamp duty value, he has challenged that stamp duty value in the court, then the stamp duty value adopted by the court, decided by the court, will be treated as the stamp duty value for the purpose of section 50C. Only that stamp duty value can be taken. Hello sir. Should I move ahead? Now the story number 3. Let's see what the story number 3 says. Okay, now. Assessee does not accept and he has not challenged the stamp duty value. What was your sale consideration? Come on, tell me. Your sale consideration was 30 lakhs. The stamp duty value shown by you, stamp duty value which was supposed to be taken was how much? 40 lakhs. So EO was saying that 40 lakhs is the stamp duty value. Do you accept this? No. You don't accept this. And you have neither challenged in the court. So court is not going to decide. You have not challenged. So the stamp duty value which you don't accept, and you have neither challenged this stamp duty value. Okay. What you are telling? This stamp duty value is more than fair market value, hence it is more than sale consideration also. It is more than fair market value of the property, hence it is more than the sale consideration of the property, and you are making such application to the assessing officer. And this thing is really very logical also. You are telling the assessing officer that AO, the stamp duty value which you are going to take for 50C, I don't accept that. No. And I have not challenged that also. But let me remind you one thing, that the stamp duty value which you are taking for the purpose of 50C is more than the fair market value of my property. Bloody, if it is more than my fair market value, it has to be more than the sale consideration also, no? Because no buyer in the market is going to give me the sale consideration equal to the stamp duty value if the fair market value itself will be lower than the stamp duty value. My market value of the property is less. Hence, I am getting the less sale consideration. Market value itself is lower than stamp duty value. How do you expect me to get a higher sale consideration? I will get the sale consideration based on the market value. Hello? Amount which is equal to or nearby the market value. I will get as what? Sale consideration. So according to the market, my property's market value is lower. Lower than what? The stamp duty value. And as per the market value only I am getting the sale consideration. If my fair market value is lower than the stamp duty value, my sale consideration has to be lower than the stamp duty value. Why don't you understand this simple logic? If you don't believe me, get the property valued. get the property valued. You will know that whether I am telling you a truth or I am trying to fool you out. AO said yes. Make some logic that if the market value of the property is lower than the stamp duty value and the buyer is not going to pay as per stamp duty value, buyer is going to pay as per fair market value. So if fair market value itself is lower, he has to get the sale consideration lower than the stamp duty value. Right? No? But this assessee cannot be trusted. See, the logical thing, he is telling us the logical thing, but he cannot be trusted. We'll have to ourselves get the property valued. So what AO will do now, on this application coming from the assessee, now after this application is made to the AO will refer the valuation of the property to whom? To VO. VO means valuation officer. In the income tax department, just like assessing officers, there are department valuation officers also. Their work is to value, determine different values of different assets and tell the correct values to the assessing officers for conducting the assessments. Yes or no? So sometimes for some property, some valuation needs to be, value needs to be determined. So AO does not have that expertise. So he takes the help of the department's valuation officers who are experts in determining the value of any asset. Yes or no? So on the application made by the made by the assessee to AO will make a reference to the VO. He will tell the VO, valuation officer, please come here, take this property, take the details of this property and determine the value of this property sold by the assessee. Assessee is saying that the stamp duty value of the property is higher than the fair market value. Hello? And as a result of that, due to the lower fair market value, he is getting a lower sale consideration. He is getting a sale consideration which is lower than the stamp duty value. So whether the assessee is telling us a truth or he is lying to us, you are the only correct person who will go and determine the correct value of the property in the market. Yes or no? So now the VO will go in the market and VO will determine a value. Can I say the valuation done by the VO? VO's value will be found out. VO's value will now be determined. So can I say the VO has determined a value known as VO's value. This was actually lower than stamp duty value. Or VO's value can also be greater than or equal to stamp duty value. See, if you are saying that the sale consideration is lower, why? Because the fair market value was lower. Hello? And our department's value is also lower. Meaning that you are not trying to fool us. You are an honest person. Hello? So in such case, even our department valuation officer's value is lower than the stamp duty value. That means you are not lying. You are an honest taxpayer. Okay. So in that case, the full value of consideration which we were considering to be a stamp duty value, we cannot take the stamp duty value. In this case, we will take VO's value only as full value of consideration because it was still more than your sale consideration. What if VO's value was 35 lakhs? It is still more than your 30 lakhs, no? So VO's value will be taken as full value of consideration. Here we don't have to see the difference between VO's value and your sale consideration should be more than 10. No. That we see only in the case of stamp duty value. If the stamp duty value is higher and the difference between the stamp duty value and the sale consideration is more than 10%, then the stamp duty value is taken as full value of consideration, which we were doing actually. But when our valuation officers determined the value of the property, we came to know that 40 lakhs, taking 40 lakhs for you will be a undue hardship for you, because even our valuation officer has derived a value and according to him the value is only 35 lakhs, which is lower than the stamp duty value. So we will not unnecessarily harass you, okay? We will not unnecessarily take that 40 lakhs of stamp duty value as your full value of consideration. We will take VO's value as your full value of consideration. Why? Because that is still more than your sale consideration. Now what if the VO's value is lower than stamp duty value? Actually it came 28 lakhs only. Then VO's value cannot be taken because it is less than your sale consideration also. Then whatever sale consideration you were showing will be your full value of consideration. Yes or no? So I will do one thing. I will here, if VO's value is less than stamp duty value, so what I will do, I will split that into two parts. VO's value is less than stamp duty value, greater than equal to sale consideration, and VO's value is less than sale consideration. Now pay attention. In our example, what is the sale consideration? 30. What is the stamp duty value? 40. Here we are saying that VO's value is less than stamp duty value. So can I say VO's value is less than 40 lakhs? So less than 40 lakhs what value? Less than 40 lakhs, it can be 35 lakhs because it is higher than sale consideration. Yes or no? Or it can be, VO's value can be 28 lakhs also, less than sale consideration. Possible or not? What was the sale consideration? 30. So can it be more than 30? Yes, but it is still less than stamp duty value. Hello sir. Can it be 28? Yes, it is less than stamp duty value as well as less than sale consideration. So if VO's value is less than stamp duty value, but it is more than or equal to sale consideration, then take the VO's value. Take the VO's value as full value of consideration. Your full value of consideration cannot be your stamp duty value. It will be how much? VO's value. Which was how much, friends? 35 lakhs. Because it is still higher than your 30 lakh sale consideration, no? And here, full value of consideration, stamp duty value cannot be adopted because VO's value is lower. Yes or no? So here what will be taken? Come on, tell me. Here your sale consideration will be taken because that is still higher than VO's value. Will you remember this? Now what if VO's value was actually higher than or equal to stamp duty value? In that case, the full value of consideration we were taking as stamp duty value is correct. Is correct, absolutely correct. Because even see, you were trying to fool us. You were telling us that the market value of the property is lower. But our valuation officer determined a value. According to him, the value is not lower than stamp duty value. According to him, his value is more than or equal to stamp duty value. That means you are trying to fool us. But we will not be fooled. Whatever stamp duty value which we were taking, no, that was correct only. See, even if the VO's value is higher than stamp duty value, that value cannot be taken as full value of consideration. 50C does not allow you to take any other value, any other higher value other than what? Stamp duty value. So at the most, which value can be taken? Stamp duty value only. And that too also if VO's value is equal to or higher than what? Stamp duty value. Yes or no? So I will write down a note over here. Even if even if VO's value is higher than what stamp duty value, still VO's value cannot be taken as FVC maximum, since maximum amount which can be taken as FVC under section 50C can be stamp duty value only. Will you remember this? Everyone? This was your 50C. First story. Do you accept the full value of, do you accept the stamp duty value? Yes. Take that stamp duty value for 50C. If that is more than sale consideration and the difference between both these amounts is more than 10% of sale consideration, then the stamp duty value which you have accepted can be taken as your full value of consideration. Do you accept the stamp duty value? No. You have challenged the stamp duty value in the court. Then the stamp duty value which is challenged cannot be taken for the purpose of 50C. Finally, the stamp duty value which is determined by the court will be taken for the purpose of 50C. If the court's decided stamp duty value is higher than your sale consideration and the difference between both of them is more than 10% of your sale consideration, then the court's decided stamp duty value will be taken as your full value of consideration. Yes or no? But the stamp duty value which you have challenged can never be taken. Getting my point? Next one. If the stamp duty value neither accepted by you nor challenged by you, neither accepted by you nor challenged by you in the court, but you are making an application to the AO that my fair market value of the property was lower than the stamp duty value, and as a result of that my sale consideration is also lower than the stamp duty value. So don't harass me by making me pay tax on a higher stamp duty value. If my value of the property in the market is lower, why are you harassing me by making me pay tax on a higher sum? Yes or no? If you don't believe me, get the property's valuation done. You will come to know that what is right, what is wrong. Okay. So on this application made by the assessee to the AO refers the case to VO. And now if VO has determined the value, and VO's value is also less than stamp duty value, then definitely you will go and tell the assessing officer, no, see, I was saying no, see, my sale consideration is lower because the fair market value was lower. Hello? And even your department's valuation officer's value is lower. See, I was saying no, I was telling you the truth. So AO says, okay, sorry, we are not going to take stamp duty value now, because taking that will be bad for you. It will be an harassment. So we will not take the stamp duty value. Okay, but wait, you will have to pay tax on your entire sale consideration because it is more than the valuation officer's value. But if our valuation officer's value is higher than your sale consideration, then we will not accept your sale consideration. Valuation officer's value will be taken as your full value of consideration. Yes or no? What if the VO's value was higher or equal to the stamp duty value? See, we knew that you are trying to fool us. You are saying that the market value is lower, hence you are getting what? Lower sale consideration as compared to the stamp duty value. See, our valuation officer is having the same value as that of stamp duty value, or his value is even higher than the stamp duty value. That means you are trying to fool us. We will not fall in your trap. Whatever we were doing, we were taking your stamp duty value as your full value of consideration. No, we were doing it the right thing. Hello, sir. So in that case, the stamp duty value will be taken as your full value of consideration. Even if the VO's value is higher than stamp duty value, that higher VO's value cannot be taken for 50C, because 50C at the most maximum can charge stamp duty value, and no amount higher than stamp duty value can be charged as per 50C. At the most how much? Stamp duty value. Got it, sir? Everyone pay attention. Pay attention, huh? Do you know this? You have done the same section, no? I have written the same thing again. No change. But wait. If it is sold as capital asset, then 50C is applicable for sure. But my question is, what if this immobile property is sold as stock in trade? Can it be sold as stock in trade? Tell me, sir. So if it is sold as stock in trade, hello, and all the conditions are fulfilled, still 50C cannot be applied. Still 50C cannot be applied. And stamp duty value cannot be taken. Sale consideration will be taxable under the head. Under the head what? PGBP. So under the head PGBP, sale consideration will be taken. Stamp duty value cannot be taken. Yes or no? But just wait. For a person doing this kind of transaction only once, the government is not leaving that person covering under 50C. So don't you think that the government will definitely not leave those people who are selling these type of properties again and again, again and again, again and again for a consideration which is less than stamp duty value? Don't you think the government is not going to leave them? So even if 50C is not applicable, here what will happen? One section will be applicable, 43CA. And as per 43CA, the consideration for sale of your stock in trade, which you are showing as PGBP income, which you were showing as what? Sale consideration. Yes or no? That will be ignored, and the stamp duty value will be taken as your full value of consideration, taken as your PGBP income, sale value under the PGBP head. So if the immobile property is transferred as stock in trade, wait, please listen to me very carefully. If the immobile property is transferred as stock in trade, the stamp duty value of that immobile property was more than its sale consideration, and the difference between both of them is more than 10%, 50C cannot be applied. But don't worry, 50C copy, paste under the PGBP provision, same to same provision is given under PGBP head. But the provision is not 50C, there it is 43CA. In 43CA, the same thing is written, that if the immobile property is transferred in the form of stock in trade and the resulting sale consideration is shown taxable under the head PGBP, the sale consideration will be shown as your PGBP income only, no? And if it is less than stamp duty value, meaning stamp duty value is more than the sale consideration, to be shown as PGBP income, and the difference between these two amounts, difference between your business income, sale consideration and the stamp duty value is more than 10% of the sale consideration, then don't worry, 50C is not applied, but 43CA will be applicable over there. And as per 43CA, what will happen? The amount of sale consideration which you were showing taxable under the head PGBP, no, will be ignored, and the stamp duty value will be taxable under the head PGBP as your sale consideration. Same to same provision. Those three stories, same. Date of agreement, date of sale agreement and date of registration, both days are different. Then which stamp duty value needs to be taken? Always the date of registration. But in one exceptional cases, the date of sale agreement, as on that day, whatever stamp duty value is given, that stamp duty value can be taken for 43CA. Every damn single thing is same. I told you, no, 50CA, entire 50CA is copied and pasted in section 43CA. Not a single thing is different. So to calculate your PGBP income also, no, this amount will be treated as your income and not the sale consideration. To calculate your capital gain also, no, this stamp duty value will be taken as your income and not the sale consideration. Got it, sir? Should I move ahead? 50C over. Now we'll go to 51. After 50C, I'll directly move on to 51. Then we are going to solve one or two questions. Okay. See. Have you heard about advance token money? This was received for transfer of capital asset. You are transferring your capital asset to someone. So you fixed the price that I am selling you the property for 75 lakhs. How much? 75. You are a seller and that party is a buyer. You both decided that the property will be sold for 75 lakhs. He is going to buy the property for 75. You are going to sell for 75 lakhs. You made a sale agreement. In this sale agreement, you wrote that you are going to give me how much? 5 lakhs right now, and balance amount of 70 lakhs you will pay in 3 installments, 30, 30 and 10 lakhs. 30 lakh first installment on or before this date, within this much time. 30 lakh second installment on or before this date, and the balance 10 lakh will be paid at the time of registration. Yes or no? Conditions, what's there? Why this condition is put, because the moment this sale agreement is made, the moment this sale agreement will be made, that buyer will say that, see, you have sold the property to me. Now you cannot sell the property to anyone else. You will say, if you have entered into the sale agreement, just sale agreement has been entered into right now. How can I believe you that you are going to buy the property from me? He will say, see, macha, 75 lakhs I don't carry with me every day. Okay. If 75 lakhs, the property is purchased as 75 lakhs, give me some time to pay that 75 lakhs, no? So he'll say, okay, how much time you want? Next 30 days, pay 30 lakhs. After that also, again I will give 30 days, pay 30 lakhs. And then after 15 days, we will get the property registered. And at that time, after paying the second installment of 30 lakhs, after that, more 15 days, I will give you more 15 days time, pay the balance 10 lakhs and we'll get the property registered on your name. But you will have to pay me an advance right now. That advance is a guarantee that you are going to honor this sale agreement. Yes or no? And then only I can say no that I have sold the property. If somebody comes to me to buy the property, I will tell him, see that I have made the sale agreement and the property is already sold to this guy. He has given me 5 lakhs rupees also. So I am going to lose that client, I am going to lose that customer, buyer, because of this agreement, saying that I have sold the property. So give me some advance. So he will say, okay, how much advance you want? 5 lakhs. Okay, 75 lakhs. Out of that 5 lakhs advance, and the balance has to be paid within this time. What if the buyer does not pay that balance amount? What if that buyer does not pay that balance amount? You will call the buyer, you will tell him that boss, you were supposed to pay this much amount in this installment, this much amount in this installment, and then we were supposed to get the property registered on your name, and you have not yet paid any single rupee other than this 5 lakh rupees of advance. Are you actually interested in buying the property or not? So the buyer is saying, sorry, I will not be able to buy the property because my wife is saying that we don't want to buy. Oh, your wife is saying that you don't want to buy. Okay. So sure, no, you don't want to buy. Okay. Should I cancel the agreement? No. Yes. Cancel. No problem. Thank you. It was nice talking to you. Kept the phone. The moment you kept the phone, all of a sudden the buyer gave you the call again. Listen, I don't want to buy. What about that 5 lakhs? Will you give that 5 lakhs back to the buyer? Definitely in the agreement you would have written, no? That if you don't honor the conditions of sale agreement, you don't buy the property from me, I will lose so many buyers, no? So forget about this 5 lakhs which you are giving right now. I will forfeit. Yes or no? So cancel the agreement at your own risk. If you don't want to buy, don't enter into the agreement. And once the agreement is entered into, you have to honor the agreement. You have to buy the property from me. And if you are cancelling the agreement, you are not buying the property from me, forget about that 5 lakh rupees advance which you are giving me. I will forfeit it. And you know, the same exact thing happened. You received an advance of 5 lakhs for transferring the property. See, that was the consideration of the property only. Out of 75 lakhs of consideration only, you are getting this 5 lakhs. If the property would have been actually transferred, actually sold, no. So this 5 lakhs along with 70 lakhs would have been taxed under the head capital gain as full value of consideration, would have been taxed as capital gain because the transfer is taking place. If the transfer is taking place, the balance 70 lakhs and this 5 lakhs, the entire amount would have been charged under the head capital gains. Yes or no? But now, the advance money which you received for transfer of a capital asset, no. Transfer could not be completed as sale agreement. Sale agreement is cancelled. If the sale agreement is cancelled and hence as a result of that transfer of the capital asset could not be completed, then the advance money which was received will now be forfeited. Possible? So the advance money which was forfeited was nothing but the consideration of the property received in advance. Received as token, received by any name, yes or no? If the transfer would have taken place, this amount would have been taxed under which head? Capital gain, no, as a part of consideration. But did the transfer take place? No. Now will it be taxable under the head capital gains as full value of consideration? No. Because if there is no transfer, then how this consideration or part of the consideration can be taxed under the head capital gain? To charge this amount as a consideration under the head capital gain, there should be a transfer. No, transfer is not taking place, so this consideration cannot be taxed under the head capital gains. Hello, sir. But don't worry, the amount of advance money which you have received and forfeited cannot be taxed right now under the head under the head capital gains, can not be taxed right now under the head capital gains since no transfer was made. Yes or no? But don't worry, this will be adjusted under section 51. There is one section 51 which says that such type of advance which is received and forfeited, which cannot be taxed under the head capital gains as consideration because there was no transfer. Yes or no? As per section 51, this will be adjusted. As per section 51, this will be adjusted. Adjusted from cost of acquisition of the capital asset at the time when assessee actually transfers the capital asset. Meaning that if we could not tax it right now under the head capital gain, so no need to worry. Still we will be able to charge it under the head capital gain, because whenever the capital asset will be actually transferred by you, no, that time to calculate your capital gain, you will reduce the cost of the asset, no? Yes, out of that cost, this amount will be removed. That much cost will not be allowed as a deduction which is equal to your advance money received and forfeited, because that cost you have already received right now, no? Hello? Which could not be taxed right now under the head capital gains. So don't worry, that cost you don't reduce. That cost is already recovered. To the extent of this amount, your cost will be reduced. So whenever you will actually transfer the property, at that time you will calculate the capital gains, no? To calculate that capital gain, your cost will be reduced by this amount which you have received and forfeited. So that time your capital gain will be higher by this amount. Hence, the amount which we cannot tax under the head capital gains right now will be actually taxed under the head capital gains only at the time when the capital asset is actually transferred. So right now, for example, the cost of the asset, advance money received by you and forfeited by you, how much was that amount? 5 lakhs? Yes or no? Tell me. Hello? Advance money received and forfeited was 5 lakhs. This 5 lakhs will be adjusted out of the cost of the asset. And for example, the cost of the asset was 30 lakhs. How much was the cost of the asset? 30 lakhs. So at the time when you will sell this asset in the future, for example, in future you are selling the asset for 50 lakhs. So sale consideration 50 lakhs. Transfer expense, example, no transfer expense. Net consideration will be 50 lakhs. Out of 50 lakhs, you were supposed to reduce 30 lakhs as cost of acquisition, because the cost of the property, cost of the capital asset was 30 lakhs. Yes or no? We will not allow you to reduce 30 lakhs. From that 30 lakhs, we will adjust 5 lakhs advance money received by you and forfeited by you. That 5 lakhs will be removed out of your cost. So now you will not be allowed the cost as 30 lakhs. Now only 25 lakhs cost will be allowed as a deduction. So out of 50, if you would have reduced 30 lakhs cost, your capital gain would have been 20 only. But are you getting the reduction of 30 lakhs cost? No. Cost will be adjusted by 5 lakhs. So now your cost will be only 25. So out of 50, 30 you will reduce? No. 20 you will get the gain? No. Out of 50, 25 will be reduced. Hello. And 25 will be your capital gain. Did you see your capital gain increased by exact 5 lakhs? That 5 lakhs would have been taxed under the head capital gains right now, could not be taxed right now, so it will be taxed under the head capital gains only, but at the time when the capital asset is actually transferred. Yes or no? But that will not be directly taxable over there, that will be reduced out of the cost of your capital asset. Will you remember this? Hello sir. But there was a big drawback of section 51. What drawback, you know? This section was used very meticulously to avoid tax on incomes. First thing. Second thing, what if I'm receiving 5 lakhs right now from you, advance and forfeiting? Don't you think till that time I'm not selling the property, this 5 lakhs remain untaxed? Sometimes it is never taxed in the hands of the assessee, because the assessee never sells the property. Sometimes it will be taxed, but the taxability will happen after 5 years, 10 years, 15 years. Just imagine, amount is received right now and it will be taxed after 5, 10, 15 years. Why? Because the property was actually transferred after 5, 10, 15 years. Till that time there is no chargeability of this amount. And this section was an area of tax evasion also for many assessees. See, I am supposed to receive 10 lakh rupees income from Rajlakshmi. I tell Rajlakshmi that Rajlakshmi, I have sold you some goods, I have sold you some products, or I have given you some services. For that you are supposed to give me 10 lakh rupees as income. I will tell her, don't pay me that 10 lakh rupees. Because if you will pay that 10 lakh rupees, either pay me that 10 lakh rupees in cash, so that I don't show it to anyone and I save my tax. Yes or no? I don't want to get that 10 lakh rupees in bank transfer as my income, because if I get it as a bank transfer, I will have to show that 10 lakh rupees as my income. Yes or no? So I told her that Rajlakshmi, do one thing. The amount which you are going to give me right now, not 10 lakh rupees, don't give it to me as my income. What we will do, I will make an agreement, sale agreement to sale of this asset. This is my capital asset which I don't want to sell. And you also don't want to buy this asset. That is known to you and me only. Nobody else knows that you don't want to buy, I don't want to sell. That is between both of us, no? So what we'll do, to show others that I want to sell and you want to buy, we will make one agreement, sale agreement. In that sale agreement, I will say that I am selling you this asset for 1 CR. How much? 1 CR. You also agree that yes sir, I am going to buy this asset from you at 1 CR. For that, give me 10 crores right now, 10 lakh rupees right now. The amount of income which you were supposed to give me as income, don't give me as income, give me that amount as advance. You will write in the agreement that 10 lakh you will give me as advance right now. And balance 90 lakhs you will pay me after 15 days or after 30 days as per the agreement. But please don't pay me that 90, huh? Because if you will pay me, I will have to give you the asset. I don't want to sell my asset. And neither you want to buy. So don't give me that 90 lakh rupees, okay? After 30 days, I will call. Hello Rajlakshmi, 90 lakh was supposed to be paid by you, no? You did not pay that 90 lakhs. Oh, so you don't want to buy the asset? Okay, no problem. So should I cancel the sale agreement? You will say, yes sir, cancel. Yes, cancel sir. I'll say, okay Rajlakshmi, thank you, cancel. But wait, the 10 lakh rupees which you gave me, in the agreement we have written, no, that if you don't pay me the balance 90 and the sale agreement gets cancelled, I will, yes sir, I know, forfeit sir. Thank you, bye. Sale agreement got cancelled. 10 lakh received, forfeited. Now I will never sell the property. Did I receive the did I receive the 10 lakh rupees of income? Yes. But on the name of advance, which I will adjust when I will sell the property. From my cost of the property, yes or no? What if I sell the property after 20 years, 30 years? So the amount of 10 lakh which I have received right now will be taxed as my income after 20, 30 years. Hello? What if I don't sell the property only? It will not be taxed at all. And what if I immediately want to sell the property? Still I will not pay tax. You know how? I will gift that property to my brother and tell my brother to sell that property. Yes. Who is selling the property now? SSE is selling? No. Brother is selling. Who is the SSE now? Brother. Capital gain will be calculated in the hands of brother. Hello. So to calculate his capital gain, his cost will be reduced. Out of his cost, advance money received and forfeited by me cannot be adjusted over there. Section 51 says advance money received and forfeited by the assessee will be adjusted out of his cost when the assessee actually transfers the capital asset. Am I transferring? No. Someone else is transferring. Has he received and forfeited the advance? No. If he would have received it, he would have forfeited it. Then he would have adjusted it while calculating his capital gain out of his cost. Not taxed at all. So this was a loophole, no? It continued till 2014. Till 2014, meaning that the adjustment under section 51 is to be done from the cost of acquisition of the capital asset at the time when the assessee actually transferred the capital asset. It was if advance money was received and forfeited. Received and forfeited. 31st March 2014 will only be adjusted under section 51 from the cost of acquisition of capital asset. Now, with effect from 1st April 2014, any advance money received and forfeited is equal to income. First of all, it is treated as income. This is no more a capital receipt. This is an income under section 224. And this type of income will be taxable under the head income from other sources. On what basis? Receipt basis only. Taxable on what basis? Receipt basis. The year in which it was received and forfeited. In that same year, now it will be made as your income and shall be charged under the head IFOS. Now we will not wait. No. Now this type of advance money received and forfeited will not be adjusted under section 51. Adjustment of above advance under section 51 will not be done, because if you will adjust it under 51, it will be taxed for the second time. No. Once you are taxing under the head IFOS on receipt basis and then adjusting from the cost also, reducing the cost, so this amount will be, capital gain will be higher by this amount, so this amount will be taxed for the second time under the head capital gains also. Hello sir, pay attention. If this advance is already taxed under the head IFOS, no, in the year in which it was received and forfeited, don't adjust this amount under section 51. So whenever in the future, for example 24-25, I am selling my property. So will I calculate the capital gains? Yes. To calculate the capital gains, I will take the cost. Out of this cost, I will reduce only that advance money which I received and forfeited prior to 1st April 14. because at that time it was not taxed under the head IFOS. That advance money which I received at that time, forfeited at that time prior to 1st April 14, that advance money I will reduce out of my cost right now at the time of transferring the asset. Yes or no? Any advance money I will not reduce out of my cost which was received and forfeited on or after 1st April 2014. Why? Because that has already suffered tax under the head IFOS. In the year of receipt only, it was taxed under the head IFOS. Now this point no, I am not going to discuss with IFOS. I will tell you YKT. You know this. Where we have studied, friends, section 51. Do you remember? Yes, that time only. Understanding? I'm not understanding. Should I move ahead? But wait. What if I'm calculating capital gains right now? Out of my cost, will I reduce the advance money received and forfeited prior to 1st April 14? Yes. Because at that time it was not taxed under the head IFRS. So will I reduce out of my cost? And after reducing out of my cost, it will be the remaining cost will only be indexed. There were litigations here also. Assessees wanted to reduce after taking indexation. Whatever cost is there, index the cost if capital asset is long term. So indexation we will get, provided the asset is transferred prior to 23rd July. Yes or no? Indexation we will take. After taking indexation of the cost, from that cost we will reduce. So the department was saying, no, you cannot do it. Section 51 tells you to adjust this amount out of the cost and not from index cost. So reduce it from the cost, then whatever balance remains, on that balance, you are supposed to take the indexation. Who was correct? Who was correct? Both are wrong. But actually, you are getting marks only if you do as per what the law says. Law says reduce it out of cost. So reduce it out of cost. Only then whatever cost remains can be indexed. Getting my point? Before indexation, whatever cost is there, from that cost you are supposed to reduce. But basically, no, this is also illogical. Because that part of cost which you are reducing was your cost for some part, no. Till the time you did not receive this amount as an advance and you did not forfeit, till that time this amount was your cost, no. So starting from the date of acquisition till that date, you should get the indexation also for this amount. Getting my point? If cost of acquisition was incurred in, as Mr. Kaushik says, that it was incurred in 2005-6, yes or no? And the asset is transferred in 2023-24. So the cost of acquisition was 10 lakhs. That 10 lakhs should be indexed from this date to this date, yes or no? So 10 lakh into 23-24 CII divided by 5-6 CII. Hello sir. But what happened? No. Here in between 2014-15, 2012-13, in this year, advance received and forfeited. Advance received and forfeited amounting to rupees 1 lakh. Now tell me, was this 1 lakh my cost, which I recovered now in the form of advance and forfeited? So on this 1 lakh of cost, I should get the indexation from 2005-6 to 12-13, no? What the assessee was saying, first I will entirely index 10 lakhs. Then from that I will reduce 10. I will reduce 1. That means he is trying to claim the indexation from 12-13 to 23-24 on 1 lakh, which is wrong, which he cannot do. But the department was saying, no, you cannot do it. First do one thing, reduce this 1 lakh from 10 lakh. How much is the cost now? 9 lakh. Now index that 9 lakh from 2005-6 to 2023-24. Now in this case, what is happening, indexation for this period on 1 lakh is not available. Assessee wanted to claim more indexation. Department is not giving that indexation which should be available. Getting my point? So there was always a fight between the assessee and the department regarding this area also. But actually, going by the plain reading of the law, section 51 says it has to be adjusted out of the cost. Period. Meaning that reduce out of the cost, not from index cost. Reduce it out of the cost, and whatever cost remain, you have to index that only. All the answers no, institute has done that only. And only then you are going to get the marks. Getting my point? First what you will do? First you will adjust the advance. Then balance amount you will get as cost. Index that only. Institute also does that. But it is illogical. I have already told you. Yes or no? And you cannot reduce after indexing also. Because that is also illogical. Basically, on this 1 lakh, you should get indexation benefit from 5-6 to 12-13 at least. That is a logical thing. But that is nowhere followed. So we are not supposed to follow that as well. So what the institute follows, for that only we are going to get marks. See, this was the problem with section 51. Section 51 had so many loopholes. The moment it came, no, it was made made a weapon to avoid taxes, evade taxes. Getting my point? So they said with effect from 1st April 2014. With effect from 1st April 2014, immediately Finance Act 2014 budget. Finance Act 2014 budget. With effect from 1st April 2014. Now this will not be adjusted under capital gain head under section 51. From now onwards, the moment you receive it and you forfeit it, it will be taxable in the same year as your income. Under the head IFOS, because it is not for the transfer, it is some other income. So other incomes are always taxed under the head IFOS. A specific charge is created under the head IFOS. IFOS, no, two types of charge: general charge, specific charge. Under the specific charge, many incomes are there. Out of those many incomes, this income is also there under the specific charge. This type of income will be taxed only and only under the head IFOS. Yes or no? Will you remember? In reality, no. In reality, there was a dispute from where to where it should be given. Yes, assessee wanted to claim the indexation on the entire 10 lakh from starting to end. Department wanted to take only 9 lakh from starting to end. Okay, that was a clash. But see, both of them doing wrong. Logically, on 10 lakh you should get index, on 9 lakh you should get indexation for the full year, full period. But on that 1 lakh also you should get the indexation from 5-6 to 12-13, which is nowhere followed. So what our institute follows, whatever the department follows, whatever the law says. Whatever the department follows, whatever the law says. Law says adjust it from cost. So first reduce it from cost. Whatever cost remains, you index that only. That's it. Got it? Sure. So in our solution also we are supposed to do that only, which the institute is doing. Illogical thing. But that is illogical, I must tell you, no? Hello, sir. So whenever there will be some advance money received and forfeited prior to 1st April 2014, what you will do? Adjust it out of the cost. And whatever balance cost remains, index that only. That's it. Got it? Should I move ahead? So this was your section 51. Now coming to one more section, 50CA. Which section, friends? 50CA. C is done. CA. Shall we start? Okay. See, Section 50 CA. This section talks about shares. Talks about shares. Which type of shares? The shares which are other than quoted shares. Quoted means the market price is available. There is a market quote available for the shares. Those shares are quoted. Quoted means market price of the share is available. We can very well identify that what is the price prevailing in the market for these shares. All the shares which are listed, their market price is known. No, they are quoted shares. So their market quote is available. Their market price is available. The shares which are regularly traded in the market, not necessarily stock exchange, but over the counter market also. Yes or no? So there is a market which is outside the there is a market which is outside the stock exchange also. That is known as over the counter market, where the shares which are not actually listed but which are about to get listed, those are traded. Okay, so there also you get the market quote, there also you get the market price. I am talking about those shares which are not quoted in the market, for which the market price is not available. There is no active trading of these shares in the market. For example, shares of A Private Limited. Have you heard about such company? No. Can you figure out what is the market price prevailing for these shares? No. And I will tell you that I have sold these shares for, I was the owner of these shares and I have sold these shares for 500 rupees per share. You will have to trust me. You cannot cross verify that whether I am telling you the truth or I am trying to hide something from you. Getting my point? So this used to happen earlier, that whenever the assessee used to sell the shares for which the market quote is not available, whatever price the assessee used to say that I have recovered this much for these shares, the department had to accept it, because there was no market price available for these shares. If I would have sold the shares for 500 and I used to offer 200 for the purpose of charging tax, I used to say that I have sold the shares for 200 only. They had to accept it. Because even if they want to verify, how they would verify if there is no market price available? See, I cannot tell such things for those shares for which the market quote is available. Because the moment I will try to lie them, I will be caught. I will be caught red-handedly. What they will do, they will go in the market and they will check, okay, you have sold on this date, no? Okay, this date, see, the starting opening price and closing price of these shares as on this date is available in the market. How can you say that you have sold less than this? You will be easily caught. But in the case of other shares which are not quoted, there is no chance of getting caught up, because the shares are not actively traded in the market, and whatever price you will say, they will have to believe. Getting my point? So to catch you from doing such activities, offering less price as a taxable income for transfer of such shares, Section 50 CA came. It came 4-5 years back only. Prior to that, the assessees used to fool the department since so many years. I have sold the shares for 500 rupees per share. I will say that I have received only 100. The remaining 400 I have received in cash. I have sold the shares for 1000 rupees per share. I will say that I have sold the shares for only 700. Rest 300 I have recovered in cash. And you cannot even catch me, because there is no there is no price in the market which is available against which you can verify that whether I am telling you the truth or I am trying to hide something from you. So 50 CA came, and as per section 50 CA, now the sale consideration which you will offer for the purpose of taxability of these shares, yes or no, that sale consideration we will compare with the fair market value of these shares. not the market price. Market price is not available, so don't worry. The fair market value of these shares will be calculated. How you will calculate? For that, the income tax rules prescribes rule. So there are rules prescribed in the income tax rules. Those rules will tell you that how to determine this fair market value. As per that prescribed rules, the fair market value will be determined. And if your sale consideration or your sale price which you are trying to show as your taxable income, if that sale consideration happens to be lower than that fair market value, no, we will ignore your sale consideration and the fair market value will be treated as your full value of consideration. 50 CA done. No need to check that whether the difference between both of them is more than 10% or not. That you see for immobile properties, not here. Even a single rupee more, fair market value is single rupee, even 1 rupee more as compared to the sale consideration. Your sale consideration will be ignored and the fair market value will be taken as your full value of consideration. Will you remember this? This you can do for all the shares, no? This you can do for all the shares. Only those shares which are other than quoted shares, for which the market price is not available. Now you have to be very careful in the exams, I told you that in the exams, if capital gain question comes, it comes on only two assets, majority, either immobile property or shares. If immobile property question is framed on any immobile property, no, then they will definitely verify. They will definitely check your knowledge of 50C. And if the question is framed on shares, they will definitely test you on this also. So the fair market value of the share will also be given. That is an indication that they want you to see that whether this fair market value is higher. If yes, then ignore your sale consideration and take this fair market value as full value of consideration. There is a method to calculate this fair market value. There is a rule made to calculate this fair market value. But don't worry, you are not supposed to learn that rule. That fair market value will be given in the question itself. Can you just compare both of them? Yes, compare and say if the sale consideration is higher, pay tax on sale consideration. If the fair market value is higher, then ignore sale consideration. Fair market value will be treated as your full value of consideration. Yes sir, no sir. Section 50 CA over. Done. Now coming to the next part. See what we have exactly done. No, I'll tell you. First let us take some, let us identify that which all things we have already covered in special aspect. Okay. One by one I will ask you. You are supposed to answer. Okay. Special aspects we started from section 5050. Do you remember depreciable assets forming part of block? When these assets will be transferred, sold from the block, how their capital gain will be calculated? Capital gain will arise only if the block ceases to exist. Or block does not cease to exist, but the value is not there in the block. No value remains. Only then you will come here, section 50. If there is value also in the block and there are assets also in the block, no need to come here. Stay there in PGBP only. Claim depreciation, yes or no? And if you are coming here, section 50, hello, no period of holding to be tested. No need to check the period of holding. The resulting gain will always be short term. And indexation benefit will never be available. Resulting gain or loss will always be short term, taxable at normal rates. And how those calculations are done, we have already seen. One question also we have solved. Okay, no? So section 50 talked about depreciable capital asset forming part of block. How to calculate the capital gain in this case? What will be the cost? What will be the period of holding? What will be the nature of capital gain? Everything is spoken, everything is discussed in section 50. Then when you come to section 50A, This was also about a depreciable capital asset only, but now not forming part of block, and on which depreciation is claimed on what? SLM basis under section 32(1)(1). After claiming depreciation on SLM basis under 32(1)(1), if that asset is transferred, will there be any capital gains? The answer is no. It will be either terminal depreciation or balancing charge under PGBP head only. But there is only one case in which capital gain will be there. 50A says that if the selling price is more than the WDV as well as more than the actual cost, then the entire actual cost will be reversed under PGBP head. That will become the cost of acquisition of the asset in the capital gain head. Selling price, bring under capital gains. Actual cost which got disallowed under PGBP, bring under the capital gain. Selling price minus cost, you will get the capital gains. That capital gains will be taxable under the capital gain head. Will you do indexation? Will you check the period of holding? Yes, absolutely you will have to check the period of holding, because this is not forming part of block. Asset is individual. So for individual asset, you will check the period of holding also. And if the period of holding is short term, cost actual cost will not be indexed. If you see the period of holding, and based on that, if the asset is long term and the transfer was made prior to 23rd July, you are going to get indexation also for the actual cost. And if the transfer was on or after 23rd July, then take the actual cost, no need to index it. But the resulting gain will be long term. Here the gain can be long term also, it can be short term also. Indexation can also be available. Yes or no? Normal calculation. But 50A tells you to take the entire actual cost which got disallowed under PGBP. No, take that entire actual cost as cost of acquisition of that asset to calculate the capital gain. That's it. Calculate the capital gains here now. Normally, the way in which you calculate for other assets, for this asset also it will be calculated like other assets only. Yes or no? Now, after 50A, we saw 50B. 50B talked about a specific. See, first asset is specific asset. Second asset is also specific asset. Now the third asset is business unit or business undertaking. Business unit or business undertaking. Transferred under a transaction of what? Slump sale. So slump sale is happening. 50B. Do you remember? First, a specific item of asset. Second, also a specific item of asset. Third, also a specific item of asset. For these assets, whenever you get these assets in the question, be very careful. Okay. Then 50C. FVC. In case of what? Immovable property, which is transferred as capital asset. What will be the PGBP income in case of immovable property transferred as stock in trade? That also we have seen here along with this 43CA, if you remember. Sure, no? Here also a specific asset. Then 50CA, just now we have discussed 50CA, that talks about FVC in case of shares. Which shares? Other than quoted shares. Other than quoted shares. Yes or no? Then 50D is there. Which section is there? 50D. Now we have tried to identify many assets. See, okay, for these assets, whatever is given in these sections, you are supposed to follow as it is. But in case of any asset whose full value of consideration cannot be ascertained or determined, then FMV can be taken as full value of consideration for that asset. So this section gives the power, this section gives the right to the assessing officer. If he tries to ask you that at what price you have sold the asset and you are not telling him the truth, again and again you are trying to hide something from him, yes or no? He is trying to ask you that tell me the truth, at what rate you have transferred the asset, and you are not telling him the correct thing. So FVC, you are showing, but according to him that FVC is not the correct FVC. He is trying to determine, he is trying to identify, ascertain the full value of consideration, but he is not in a position to ascertain that correctly. Because who is going to tell the full value of consideration? You only know. And you are lying. We don't have a trust on you. We don't believe you. Jewelry bloody you have transferred. 50 grams of jewelry you have transferred, and you are saying that you have transferred that jewelry only for rupees 5 lakh. How can we believe? Tell us the truth, no? But you are not telling us the truth. So we have 50D. We can take the fair market value of that jewelry as full value of consideration. Getting my point? Hello? Sometimes it might also happen that assessee is not lying. He is telling the truth, but actually the full value of consideration cannot be determined. How come? See, I have 3 assets. Some shares are there, one land is there, and some jewelry is also there. Shares are there, land is also there, jewelry is also there. Now I am in urgent need of money. I am transferring all these 3 assets together to Kaushik, and I am telling him to give me 5 crores rupees. Give me 5 crore rupees, Kaushik, right now, and take all these 3 assets from me. I have transferred all the 3 assets, but for a total consideration of 5 crore. Even I don't know that how much I have charged for which asset, and even he doesn't know that how much he has given for which asset. So definitely if the assessing officer is going to ask me that for how much you have transferred your jewelry, for how much you have transferred your share, for how much you have transferred your land, I will not be able to tell him correctly. Yes or no? I'll tell him that I have transferred all the 3 assets together for a lump sum amount of 5 crores. So in that particular scenario, 50D can be, 50D can be of great help. The fair market value of the asset can be treated as my full value of consideration to determine the capital gain for each asset. Getting my point, everyone? So this was your 50D. Now see, this was the last section of 50 series. This is what I was talking about. Wait, see, this section I was talking about. This section. 50D. Consideration for transfer of a capital asset cannot be ascertained or determined. Fair market value of such capital asset can be taken as full value of consideration. So with this entire series of section 50 is over. Okay. Now after 50, there is one more section, section 51. And believe it or not, section 51 we have already done. Section 51. Advance, money received and forfeited. Sir, if it is prior to 1/4/2014, or it can be on or after 1/4/2014. So if it is prior to 1/4/2014, it is covered by section 51, adjust from cost of acquisition at the time of transfer of capital asset, and this one is not covered by section 51 since it is your income with effect from 1st April 14. This is treated as your income and taxed under the head income from other sources. There is a specific charge. 56 subsection 2 clause 9 is there. As per clause 9 of specific charge 56.2, it is already taxed under the head IFRS. So you don't adjust it out of the cost. Yes or no? So adjustment from cost of acquisition of the capital asset at the time of transfer. Will you do it or you will not do it? You will not do it. This will not be adjusted under section 51 because it is already taxed under the head IFRS. Will you remember this? This also we have done, no? So section 51 is also done. Now see, we have completed all the things in special aspects. Now we are getting into section 47. Do you remember I told you that there are certain transactions which are treated as exempt transfers, meaning if these transactions are happening with your capital asset, there will be no capital gain because these transactions are treated as what? Exempt transfers. So one by one I will be discussing those transactions with you. Along with section 47, no, we are supposed to see two more things. Whenever we see section 47, always check section 49 together and always check period of holding table together. These three things must be done together. Only then you will understand that what the bloody hell I am doing. Section 47 will talk about exempt transfers. Section 49 will talk about deemed cost of acquisition, and period of holding in that particular scenario. Okay. So one transaction will be seen from the point of view of two persons. The person transferring that asset, making an exempt transfer, and the person who is getting that asset as a result of that exempt transfer. Yes or no? So always these three sections are done together as a combo. So what I want to tell you, if I will explain one transaction, no, then you will understand that how these sections are connected with each other. Okay, no? Pay attention. See, the first transaction which I am going to tell you is conversion of bonds or debentures into shares. Why they will be converted into shares, sir? Simple. You acquired convertible bonds. You acquired convertible debentures. And at the time of their maturity, they will be converted into shares. At the time of buying only, you were aware that whenever they will be matured, no, in return I will not get the money, I will get the shares. Okay. So, for example, 100 bonds or debentures you acquired. These bonds or debentures were acquired in 2013-14. Okay. 2013-14 you acquired them. And the actual cost, this is the, wait. I'll first write down a date. 1st of August 2013. This is the date of acquisition in 2013-14. At what cost you acquired? The cost of acquisition, meaning the actual cost of these bonds or debenture, was 1 lakh rupees. Example. Okay. So for 1 lakh rupees you acquired these bonds, and at the time of the acquisition only you were said that these bonds will be maturing after 10 years. Maturity will be after 10 years, and at the time of maturity for each bond you are going to get 10 equity shares, 10 shares. Okay. So after 10 years the maturity will happen. So for example, after 10 years means 1st of August 2023, meaning previous year 23-24, they will mature. So on their maturity, now they are converted into what? 1000 shares. How come 1000 shares, sir? Sir, how come 1000 shares, sir? Because for each bond you were supposed to receive 10 shares. So for 100 bonds you will get 10 shares per bond, no? So 100 into 10, 1000 shares you are going to get. So in 23-24, these bonds got converted into 1000 shares. The fair market value of these shares received by you, fair market value of shares received by you was rupees 2,10,000. Possible or not? Tell me. Now my first question. Are you transferring your asset to any other person, or you yourself are getting some other asset in return of your original asset? Is as good as exchange only, no? You are exchanging. You are giving away your debentures, and against that you are getting what? Shares. Giving away means extinguishment of right is happening, or you can say relinquishment, or you can say exchange, call whatever you want. Okay. You are exchanging your debentures for shares, or your right in the debentures getting extinguished, against that you are getting what? Shares. How much worth of debentures going? 1 lakh. And how much worth of shares coming? 2,10,000. Can I say there is an appreciation, there is a gain of rupees 1,10,000 happening to you? Yes or no? But this gain is happening on conversion, no? This gain, entire 1,10,000 rupees of gain happening on what? Conversion. Tell me, this should be taxable to you or should not be taxable to you? Should be taxable to you. But if it is taxed right now only, then it is wrong. Because it is still there in the value of shares. You have not realized it. You will realize this 1,10,000 of gain when you will be selling these shares in the future. So right now your 1 lakh becoming 1 lakh, 2,10,000. So you are getting a gain of rupees 1,10,000 at the time of conversion. So in the previous year 23-24, gain is there. But are you realizing that gain in your hands? Are you getting that actual 1,10,000 in your hands, or it is still there in the value of that asset, in the value of those shares? This 1,10,000 gain is still there in the value of that shares which you are holding right now. This 1,10,000 will be realized by you. It will materialize when you will sell those shares in the future. So it should be taxed at that time and not now. Yes or no? So in order to give you some relief that okay, this 1,10,000 is not coming in your hands, and still we consider this 1,10,000 as your gain right now and charge tax on this. It will be very difficult for you to pay tax on some income which you have not realized. You realize this income, and out of this income when you pay tax, it is okay. But the income, the gain which is not realized only, which is not coming in your hands only, on that if we are charging tax right now, from where you will get that money to pay the tax? Maybe you might not have that money to pay the tax on this amount. Yes or no? So don't pay tax on this 1,10,000 right now. This gain will not be taxable, but in order to exempt this gain, they will have to exempt this transfer, conversion of bonds into shares. This transfer they will exempt. So what will happen in the previous year 2023-24, in this previous year, see 23-24, conversion of bonds or debentures into shares. This conversion will be treated as exempt transfer under section 47. So in 23-24, the appreciation gain of rupees 1,10,000 will be taxable or will not be taxable? Will not be taxable. This 1,10,000 will not be taxable since the transfer is exempt under section 47. So for not charging tax on this 1,10,000, this transfer we had exempted that time. That does not mean that we will never take tax on this 1,10,000. In future, whenever this 1,10,000 will realize, no, at that time we are going to charge tax on this. Yes or no? So wait. Now, do you have 1,000 shares? Now will you have 1,000 shares or you will have debentures? You will have 1,000 shares, no? Hello, sir. So now what will happen? No, these 1,000 shares are sold by you on 2nd of May 2024, meaning in the previous year 24-25 you are selling them, and the sale price, sale consideration was 3 lakh rupees. Now tell me one thing. What was the value of these shares when you first started holding them? What was the value of these shares when you first started holding them? 2,10,000. From that day you started holding the shares. Now the value of these shares started appreciating, and on 2nd May, when the value of these shares was 3 lakhs, at that time you are selling that shares. So can I say, for the time for which you held the shares in your hands, during the period for which the shares were held by you, during that period there was an appreciation in the value of shares by 90,000? Hello? So what you will tell? That in the previous year 2024-25, 24-25, now the shares are what? Transferred. Shares are transferred means it is a taxable transfer now. Okay. Shares is a capital asset. They are sold means taxable transfer. Okay. Transferred means sold. Okay. No, I'll write sold. Sold means taxable transfer. So your capital asset, which was shares, which is sold now, meaning transfer, taxable transfer is happening. This time your capital gain will be calculated. Now in order to calculate this capital gain of shares, what will you take? You will take full value of consideration. That is nothing but the sale proceeds. How much? 3 lakhs. Minus what? Transfer expense. So for example, there was no transfer expense. If there was some transfer expense, we will reduce that transfer expense also. But in our example, there was no transfer expense. Yes or no? So the net consideration will be how much? Will be 3 lakhs. Now please pay attention over here. Now out of this net consideration, I will reduce cost or index cost. Depends on the period of holding of these shares. But wait, that we will decide. Whatever it is, how much gain is happening to me? Come on, tell me. By selling these shares for 3 lakhs, how much gain is realized? Can I say this 90,000 gain is realized? The gain for the period for which I am holding the shares. So the gain of the shareholding period is getting realized, and also that 1,10,000 gain will also realize. Hello. So how much total gain is realized? 2 lakh. So here your capital gain should be 2 lakhs, no? In that 3 lakh, whatever total gain you are realizing is what? 2 lakhs only. So that entire 2 lakh shall be taxable for you. Don't you think to tax this 2 lakhs, the cost of shares which you will reduce cannot be 2,10,000, it has to be 1 lakh only. So whenever you will sell these shares, did you acquire these shares from outside by paying money? No. So you cannot take actual cost. Actual cost you take for those assets which you acquire by paying money. Did you pay the money to acquire the shares? No. You did not pay. So actual cost don't take. Can you take the fair market value? Fair market value? You could have taken by saying that, see, the shares which I got on conversion, if I would have gone in the market and bought those shares, I would have paid how much? 2,10,000. So that 2,10,000 should be taken as my cost of acquisition of shares. You could have told this. And if you would have accepted that claim, then here if we would have taken cost as how much? 2,10,000, we would have been able to charge tax only on 90,000. Meaning the gain happening during the period of holding of the shares, only that gain we would have been able to charge. Yes or no? But only that much gain is realized, or the earlier gain is also realized. So we cannot allow you to take 2,10,000 fair market value here as your cost of these shares. Because if we allow that, what will happen? The gain happening in the period of holding of the shares which you are realizing, only that gain will be taxable. So what about that gain which we left at the time of conversion, thinking that when it will be realized, at that time you will pay tax? That will not be taxed at all, no? Even if that 1,10,000 is realized right now, you will not pay tax on that. We want tax on that also right now when you are realizing it. So we want the tax on the 90,000 also. We want the tax on 1,10,000 also. The gain happening in the period when the asset was held as shares, and the gain happening in the period when the asset was held as bonds or debenture prior to conversion. So the gain happening prior to conversion, which was exempted, the gain happening in the period during which the shares are held, both the gain, meaning 2 lakh we want to charge. 2 lakh means 1,10,000 plus 90,000. This is the gain for the period of holding of bonds or debentures. This is the gain for the period of holding of shares. This we exempted. Do you remember here? See, this we exempted. This also is realized right now. This also we want to charge. And the gain for the period of holding of the shares, anyways we are going to charge. So this entire 2 lakh will be charged only if cost of acquisition to be taken here is 1 lakh. And what is that 1 lakh, my dear friends? Cost of acquisition of bonds or debentures shall be deemed to be the cost of these shares. Whenever you will calculate the capital gain for such type of shares, no, which you did not buy, which you received on conversion of bonds or debentures, yes or no? So now the shares are special type of shares. These are not acquired by you. These shares became your property on conversion of bonds or debentures. These shares became your property, became your capital asset on conversion of bonds or debentures. Whenever these shares you will transfer in the future, the cost of these shares will be the cost of bonds or debentures which got converted into these shares. Yes or no? So this is given under section 49 2A. So as per 49(2)(a, what did I say? As per 49(2)(a, cost of these type of shares will always be the cost of bonds or debentures which got converted into these type of shares. And that was how much? 1 lakh. Only if this 1 lakh is taken, only if the gain which was exempted earlier on the conversion, as well as the gain for the period for which the shares were held as what? Stock in trade, only then both the gains which are realized right now will be charged to tax. And we are not going to leave both the gains. We are going to charge tax on both the gains. Yes or no? Hello, sir. So can I say gain for this period, gain for this period is also taxed? Gain for this period is also taxed. Tax both the gains, the cost of acquisition of the bonds or debentures will be deemed to be the cost of these shares as per 49(2)(a. As per this section, this cost will be taken as cost of your shares. Understanding or not? Now tell me, you got the cost. By taking this cost, the gain for this period is charged? Yes. Gain for this period is also charged? Yes. Then why are you bloody taking the period of holding only for shares? In the period of holding of your shares, also include the period prior to conversion. Yes. Because the gain for that period is also getting taxed. Only the gain for shares was taxed? No. Then the period of holding of the shares would have been taken. Hello. But the gain for earlier period is also charged? No. So with your period of holding of the shares, also include the period of holding of the bonds or debentures prior to its conversion. So whenever you will see the period of holding, you will see your period of holding from 23-24 to 24-25. No, you will see the period of holding from 13-14 to 24-25, because for this entire period of holding, whatever gain is happening, that is getting taxed in your hands by taking this amount as your cost of these shares. So the period of holding will be taken from 1st of August 2023 to 2nd May 24? No. It will be taken from 1st of August 2013 to 2nd May 24. If you take only this period of holding, no, short-term gain, short-term asset, see, less than 24 months. Not even more than 12 months, see. Less than 24 months, less than 12 months. So if you count just this period, no, so the shares will be short-term only. But only this period gain is charged. No, this period gain is also charged. No. So why are you taking only this period? In this period, include the period of holding of the bonds also. Because this gain is also charged to tax along with 90. Because this cost is taken as cost of shares. Getting my point, everyone? Logic, no? Paka? Now, period of holding you come to know. Now looking at this period of holding, tell me, short term, no? If the entire period less than 12 months, less than equal to 12 months, less than equal to 24 months, then cost you have, no? How much? 1 lakh. Reduce without indexation. But looking at the entire period, in our case, can you see the period of holding, total period of holding from here to here is more than 12 months, more than 24 months? Hello, sir. Then the capital asset is short term or long term? It is long term. And if it is long term and the transfer of shares has taken place prior to 23rd July, so the cost of acquisition which you are taking as per 49(1) needs to be indexed also. And indexation you will get from here to here? No. Indexation should also be from here to here, no? So what you will take? Cost of acquisition multiplied by transfer year CII and divided by acquisition year CII. Getting my point? Cost of acquisition as per 49(2)(a) multiplied by CII of transfer year and divided by CII of acquisition year. Because for this entire period the gain is charged. Hello. That is the reason why this amount is taken as cost. That is the reason why this period is also included in the period of holding of your shares. So why are you taking the indexation only for this period? Take the indexation from the beginning only, no? Done, sir. So in our case it is short term or long term? It is long term. So cost you know? Yes. Now period of holding is long term. Will we take only 1 lakh or will we take indexed index? See, if the date of transfer here was on or after 23rd July, no, then no need to index also. Because on or after 23rd July, if the transfer is made, no indexation is given. I have deliberately taken that date prior to 23rd July so that we can index also. Getting my point? So do one thing. Cost of acquisition we know. Okay. Now did you understand the entire logic? So for logic only I had written all these things. Okay, no? Now whenever you will solve the question, you will reduce the cost of acquisition, index cost of acquisition. So in the index cost of acquisition, what you will take? 1 lakh. This is the cost of acquisition as per 49(2)(a) multiplied by CII of transfer year 363 and divided by CII of acquisition year. What was the acquisition year? 1314. What is the CII of 1314? Please tell me. It is 220. Now please do the needful. 1 lakh into 363 divided by 220. You will get 1,65,000. Are you getting 165? Sure, everyone? So, reduce 165 out of 3 lakhs. You will get 1,35,000. Sir, we were getting 2 lakh rupees, no, sir? Gain should have been 2 lakhs, no? Then how come it is less than 2 lakhs? Bloody, we have done the indexation, no? See, no? Because of indexation, that 1 lakh got increased. And as a result of that, the 2 lakh capital gain also decreased. Got it? If we would not have done the indexation, we were charging tax on only 2 lakhs, no? Done? Let's meet tomorrow. Okay? Okay. Bye. Bye, everyone. Bye.